So we are going to look at a question in financial maths that you need to be familiar with. It is regarding working out tax rates when we have two different tax rates. So everybody who works will pay a certain standard rate of tax on all of their income, and then above a certain income they will pay a higher rate of tax. So it's really important that you understand that vocabulary, that you understand what the standard rate of tax means, what the standard cut-off is, what the higher rate is, what tax credits are. So the vocabulary generally in financial maths is important. We'll run through this question anyway, and we will come across lots of that vocabulary as we go through. So we're looking at Angela here, who has an annual salary. So that's the total amount that she earns in a given year of 46,000. Her standard cut-off rate is 28,000. The tax credit she receives is 3,200. And we have two income tax rates in this question. We have 20% and 40%. So that means that we're going to have to take her annual salary and find two different tax rates. So we start off by saying she earns 46,000. That's her gross income. So that's before any deductions. And because she earns more than the standard cut-off rate of 28,000, what we're going to have to do is split her salary. So the 28,000, this is where she's going to pay standard rate of tax. The standard is 20%, so 20% of this. And then the remainder, so in other words, 46,000 minus 28,000. So anything above the standard rate, which works out as 18,000, she's going to pay the higher rate of tax. So the higher is 40%. So what we need to do is find 20% of the 28,000, find 40% of the 80,000 and add them together to get the total amount of tax. So 28,000 multiplied by 20% is going to be 5,600. And then 18,000 multiplied by 40% is going to be, get my calculator for this one, that's a nice handy way of finding percentages, just using your percentage button there on the calculator. So that's equal to 7,200. So 7,200. So we add the two of them together and we get 12,800. Now that is her tax, but we call this her gross tax. And that's because we haven't applied her tax credit yet. So the tax credit is given to Angela, it's given to every earner in the country to reduce their tax bill. So what we need to do with the tax credit is subtract that from the gross tax. So we see that her tax credit is 3,200. We're going to subtract the 3,200 from the 12,800. Get my calculator for that. 12 minus 3,200 is equal to 9,600. So this is the net tax, or the actual tax that she pays. So the final thing in a question like this, you'd often be asked to find the net income. So net income is what you actually take home. So sometimes it's called the take-home income. So in this case, the only deduction that we have to take into consideration in this question is income tax. Quite often you would also be dealing with USC, PRSI and so on. But for this case, just have income tax, or the tax that we've calculated here. So we're going to go back to her gross income, which was 46,000. We're going to subtract the net tax from that. And that's going to leave us with 36,400. So this is her net income. So that's just a basic question on income. And again, the vocab is really, really important in this.